Okay, in this video, we're going to talk about Employee Stock Purchase Plan, ESPP. Now, this is commonly offered when you work for a company that is actually publicly traded. So you can purchase the stock that's out trading on the market right now for the public. And so what this is it's part of a compensation package. It's a benefit to be able to purchase the company's stock at a discount to its current fair market value, okay? So the company defines what the discount is, right? Because this is a benefit ultimately they're deciding on, that they're electing to offer to their employees. Commonly, it's 15%, a very common discount, but it could be different, could be 10% or whatever. Now, usually the way it works is you opt in by a certain date, and then it could be quarterly, it could be every 6 months. They do a buy-in, okay? And they measure the buy-in price. They have their calculation for determining what your purchase price is going to be, a 15% discount on what value, like at the time of, that you enroll, at the time that you actually make the purchase. So it's all defined within the plan itself. They all work a little bit differently. But essentially at a certain buy point, they withhold money from your paycheck and they make the purchase of the stock at that discount. Okay, and then you own the stock. All right. So again, their buy points. It's not constant type of thing. It's usually at very set, defined intervals. Again, quarterly or every 6 months or something like that. Now, to get the best, most preferential tax treatment on employee stock purchase plan stock shares, you need to also meet qualifying disposition. So this is similar to the incentive stock options qualifying disposition. So you qualify if you sell at least 2 years from the offering date and 1 year from purchase date. So commonly, you might receive the offer, 6 months later actually make the buy. They might actually complete the purchase. So 6 months have already gone by from the offering date. And so you might just need to wait an additional 18 months to hit the full 2 years from the date of offering, and it would be more than a year from the date of purchase at that point to meet qualifying disposition. If you do, then you can sell these shares or gift them or whatever. You can sell them and you will get long-term capital gains on that bargain element. Again, this discount is a bargain element, similar to the incentive stock options. So you get long-term capital gains on that 15%. So essentially you buy in, you get an automatic equity, right? You've gained 15% in that stock, roughly speaking. And then when you sell, that's going to be a long-term capital gain, which is a preferential tax rate, okay? So pretty nice. You can talk, if you have this benefit available to you, you can review all the literature or reach out to HR and ask them more about the plan itself and how it works. And you can make your election as to how much you want to participate and how little or not at all. Okay, it's just an option for you. So that one is pretty straightforward. It's very similar in some aspects to the incentive stock options, but it's typically for publicly traded stock. Okay, all right, that wraps up this convo. We're going to end it there with equity, company equity and stock options and equity grants, and we'll move on in the next video. Thanks.
Take advantage of the benefits available to you